The financial barometer for the free world is in New York's Wall Street. The rise or decline of stock prices here more often than not influences the activity of stock markets overseas. The man in the street as well as the big and little investors have a stake in the transactions on the trading floor of the great New York Stock Exchange. Headline news is made in a mighty avalanche of selling, which sees stock prices dive and more than $20 billion in paper values lost. In one day, the stock market reverses this dizzy downward spiral with a flood of buy orders. The ticker tape system falling behind the trading for the second time in 24 hours. And this is the exciting feverish scene, the volume reaching 14,750,000 shares, the second highest in history. In the midst of the recovery from the biggest drop since 1929, calm observers explore the one-day tumble. There is caution in predicting a continued upward climb, but businessmen as well as stock owners breathe easier. Confidence of the consumer need not be shaken, Americans are told. President Kennedy has pointed out that the economy, which is moving steadily forward, is the best stimulant to the stock market and the most natural one. In Washington, Mr. Kennedy's advisors feel that business conditions are very sound and that there is no justification for panic selling of stocks. At his news conference a week before, the president said,
"There have been many, at least 4 occasions, since the end of the Second War when the stock market has dropped at the time when the economy was rising. I think last week we talked about, I gave an example of 1956, when the stock market went down at the time when the economy was steadily rising. The economy is rising, unemployment is down, the prospects in this month are good, and therefore I think that the stock market will follow the economy.